We're back with Hank Smith and Paul Dietrich. It has been 3 years since we had a correction in the U.S. market, and some say, of course, we are overdue. You guys have a different approach to investing. I want to ask you first, do you think we're headed for a correction?
Well, eventually we're going to have a correction, and corrections are healthy. The way we all reacted in the previous pullback a couple of weeks ago, it felt like a correction. That's why I said maybe 3.5% is the new 10%,
Yeah,
10%
right.
being the correction.
Right.
But I think the bull market is still in the middle innings here. Bull markets don't die because of exogenous geopolitical events. They die because of an anticipation of a recession, and it's really hard to see a recession 18 to 24 months out. So I think the bull market's still intact. Are you going to get the kind of returns that we've had in the previous 5 years? No, but you're going to get better than bond returns. You're going to get better than cash returns. You're going to get better than commodity returns.
And yet, Paul, you're a value guy. You can't find value.
Well, that's true, but I agree with Hank. We are in a bull market, and just because you have a correction doesn't mean you're going into a recession.
Right.
I mean, we had corrections a few years ago, 10, 20%, and then the market just went up and was up for the year. I think that's going to happen again this year. I think we're going to have a good end of the year after the elections, but the market, in my judgment, is overvalued. Nobel Prize winning economist Robert Shiller did a piece this weekend in the New York Times saying that according to his model, the market is overvalued. I use a different methodology at Fairfax Global Markets, and what we use is every Friday night I do a value screen of low PE, high return on equity, high return on free cash flow, and every Friday night I do this. A year ago I could find over 100 stocks. A few months ago I'd find 30 stocks. Last Friday night I found 11 stocks.
11 stocks.
That means there are no undervalued stocks in this market. And every time that's happened in the 26 years that I've been managing money, is we've had some sort of pullback and correction. Again, I don't believe I agree with you, we're not going into a recession. This is going to be a bull market, but we have to go back to the mean, and a correction would be very healthy, I think, for the market.
How significant a correction are you looking for? We haven't had a 10% correction in years.
Well, it's been about 3, and I think we're due for a 10 to 15% correction, according to my model, that would get us back to where I can find enough stocks to put together a diversified portfolio.
And here's the amazing thing, that still there's more money going into fixed income funds, which are clearly, bonds are clearly more overvalued than stocks. I would argue stocks are fairly valued, not overvalued, and money's coming out of equity funds. That tells you there's still a lot of anxiety, a healthy dose of fear. From a sentiment standpoint, we're nowhere near euphoria. We're nowhere near greed. Anyone buying a bond today is not expressing confidence, exuberance, optimism.
Yeah.
They're expressing fear and anxiety.
I agree with you, and I think that all the risk reward is on the risk side, and that's where the Ukraine could come in and be a catalyst for this. But I mean, investors have to ask themselves, do I really want to be in bonds when the Fed says they're going to raise rates next year? Do I really want to be in stocks now at record highs? And do I want to be in gold, which is doing nothing?
What's the alternative, though, Paul? And let's say I think, okay, Paul's got a good point. I'm going to start selling. Where do I put my money?
Well, I think in the short term, again, I can't find anything to buy. I think you have to sit in cash until we have a correction, and then you go right back into the market, because I agree with you, we will have a bull market.
So you're going to buy on the dip.
Exactly.
And I would say there's still plenty of equities out there that have better than bond yields in every single sector. Here we are 5 years into a bull market, and you still can find better than bond yields on the equity side with growth of income. We just bought Target, for example, with a 3.5% dividend. They raised the dividend 20%. You have a catalyst of a new CEO who can do any number of things to re-energize the Target brand. And I think that's fairly valued.
All right, so Target, a name that you like. one single best idea right now, not cash, Paul?
Agriculture.
Agriculture.
There's an ETF called MOO, M-O-O, that's the agribusinesses. They're starting to go up again. Farmers have had a tough time with droughts and everything else, but the demand, mainly from Asia and everywhere else, we're seeing prices going up. They have the pricing power. Sanderson Farms and Pilgrim Pride are another undervalued play in the agribusiness food business, and that's a trend that's going to be. Food prices are going up no matter what.
And they have been certainly approaching. Gentlemen,
you wouldn't know he is a farmer as well dressed as he is today.
No, you would not.
I live on a farm in Middleburg, Virginia.
I love it. That is a great take on the market. Gentlemen, thank you very much.
It's good to be
Terrific conversation. We so appreciate your time. Hank Smith, Paul Dietrich joining us. We'll see you soon, guys. Please come back soon.